Welcome to Topic 1, Introduction of Auditing. What is auditing?
Auditing is the accumulation and evaluation of evidence about information to determine and report on the degree of correspondence between the information and established criteria.
Auditing should be done by a competent and independent person.
What do you mean by competent?
Competent means the auditor must have skills at least 2 years experience and must be knowledgeable.
Objective of financial statement audit.
Primary objective: to form and express an independent expert opinion based on the audit work performed that our financial statements are free from material misstatement.
Secondary objectives: first, to form and express an opinion on compliance with statutory requirements and other regulations. Second, to detect and prevent fraud and error in accounting records.
Differences between accounting and auditing.
Accounting create financial statement.
Auditing examine the financial statement.
Accounting process of recording, classifying and summarizing economic event for decision making.
While auditing is process of accumulation and interpretation of evidence, evaluating the result to express opinion.
Types of audit. Compliance audit, to determine whether the auditee is following specific procedures, rules, or regulations set by authority.
Operational audit evaluates the efficiency and effectiveness of an organization's operating procedures and methods.
Financial statement audit, to determine whether the financial statements are stated in accordance with specified criteria.
Part of auditor.
External auditor responsible for auditing the published historical financial statement of the company.
Internal auditor is employed by companies to audit for management. Their responsibilities depend on the employer.
Government auditor, responsible to perform the audit function for all federal, state authority bodies and public authorities.
Tax auditor, responsible to audit the taxpayer return to determine whether they have complied with the tax law.
Forensic auditor, employed by corporation. They are trained in detecting, investigating and deterring fraud and white-collar crime.
What is Big Four?
Big Four consists of 4 largest companies who provide auditing and assurance services with other services.
Deloitte, PwC, KPMG, and EY.
An auditor must follow some standards. First, ISA issued by IAASB.
Second, MASA issued by MIA to augment ISA.
Third, MFRS established by MASP.
Oh wait, let me tell you about independence in fact and appearance.
Independence in fact is personal characteristics of auditor, which is auditor himself as a good character and unbiased.
Independent in appearance based on perception of third party. Hence, auditor must not have any financial involvement in client company.
Oh no, there is threat to independent auditor.
Advocacy,
Familiarity,
self-review threat,
self-interest threat.
intimidation. Hi Miss, can you explain to me about self-interest threat?
Oh, self-interest threat is when auditor acts in his own emotional, financial or other personal self-interest.
Oh, can you give me an example of the self-review threat?
The example is when the auditor concerned about the possibility of losing the engagement.
Now, I will explain to you about self-review threat. Self-review threat is when the auditor has to review subject matter for which he was previously responsible and which is significant in the context of the audit engagement.
Yes, that's true. The independent auditor will avoid in auditing his own or his colleagues' previous works.
Sir, is it true that advocacy threat is when auditor promote the client position to the point that his objectivity is compromised?
Yes, absolutely right. You are considered as dependent auditor when a promoter has shares and other securities in client's business.
Next is familiarity threat. Familiarity threat is due to a long or close relationship with a client. An auditor will be too sympathetic to their interests or too accepting of their work.
And lastly, the intimidation threat. Intimidation occurs when the auditor may be prevented from acting objectively and exercising professional skepticism by threat, actual or perceived, from the directors, officers, or employees of an audit client.